All right, so we're just going to review market action. Where was I? Okay, I guess all right, so we'll just start off right here. I'm not sure if I went over this, but basically over here you have move down and a rally down. So what does this mean? It means it's going to set up, test, and go. But unfortunately, it didn't test all the way, so can't really do anything about that. So this was marked down. And also note that I'm going to be explaining why some of them work and some of them don't. So we're done with this trend. Basically, it set up the move from here to here and went down, and it was just the markdown. All right. So this right here is you may look at this and say, oh, this is a base, this is a rally, this is follow through, this is biggest in 22, biggest in 14, blah blah blah. ES is rallying, but it doesn't hold and it gets sprung. Why did it get sprung with a shakeout? So if you were ready to buy the pullback, it sprung and then went. So the reason why I did that is very simple. It's because it's a downtrend on the higher time frame. When you have a higher time frame going down, this is what happens. They're liable for springs and shakeouts. Bull moves in a downtrend are going to consistently have springs below their sign of strength, below the low. This just happens, and upthrust after distribution. If you try to go short in a strong market, you're going to have upthrust after distribution. All right, over here we see again, this is a market that rallies, pulls back. Where was I? This one. Okay, so this rally, and then I don't think it moved, and then finally it moved somewhere over here, but not good, because like, how much of a pullback are you going to get? You'll probably put it here, not all the way at the low, right? Even if so very likely, because after you see this higher high, how low will it go? So again, it's the same idea. If it's in a area of you're just gonna lose money if you just counter trend. That's really bottom line. All right, here same shit. Like, you see, you put your order, and I know why, because all this accumulation, little distribution, accumulation, little distribution. This is another pain in the what. Here it goes 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. This barely makes it, but this is valid. Now here you get the markup. Okay, now you see the difference between when you are trading with trend and when you're trading counter trend. The counter trend move, if you're lucky and don't get sprung, is this much, meaning a rally made a little higher high and test. This is how much of a leg you get. In a trend move, when it gives a signal, this is how much trend you get. I mean, I'm assuming that you got in here. You see the difference? This is it's 1, 2, about almost 3 times as much. So this is the issue. Like, you must understand, as a Wyckoff style trader, must understand trend and counter trend. Remember this: the purpose of a counter trend is to test or mitigate. Basically to test breakouts and go back to areas that have not been tested. That is the purpose of counter trends. They are specifically to go down to test, and that's why the signal itself is the move on counter trends. That's the problem. Anyway, the market is up, so we're gonna look for bull moves on the pullbacks. All right, let's move on. Okay, so I went through here. This was the move right there, markup, rallied, but unfortunately it didn't pull back enough for an entry. So I mean, this is very hard to enter. And did I do this? That right there, we pull, excuse me, pull back, reaccumulate, 3, 4, possible re-entry here. Anyway, it goes up, 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 and now it's up here. Now we'll move to the next YM. And we're going to go over what works and what doesn't work. Over here, what you see this is the move, right? This is selling pressure. Go makes a lower low. Then what happens? Blast off. So counter trend trading fails. Why did it fail? Again, I tell you that the purpose for a counter trend trade is only to pull back. The signal itself is the move. Okay? And if you're lucky, you might get like 2R, something like that. So, you know, you could see that this, and counter trend is also inducement. Like you'll get the fear of missing the move folks in as soon as it does a breakdown. And they'll get in, then they'll get stopped, then it'll create short covering, which will create a new high. That's the cycle. All right? They need the short covering. So this is set up. It goes down, so you short, then that it'll reverse, create the short covering to create a new high. All right. So take a look at this. Again, you see here, market goes down. This is very strong. I mean, this is big wave, big selling, big volume. But look at the move. Here, yeah. I mean, this is the leg you get. This is the leg you get if you don't get stopped out as it comes back up right here. And if you got in here, I mean, look at this. This is the leg you get. Isn't that ridiculous? So you can see that this, based on this selling, if you're selling the test, this is the leg you get, or this is the leg you get, which is ridiculous. Here, it doesn't even work because, again, counter trending. So remember, counter trending, the purpose of counter trending is to test and then to create the short covering for a new high. So those are two reasons. All right, now when you take a look at the markup, I mean, look at the move. Pull back. That's just the first leg. It's a double. You know, so again, it's very obvious that, and this is another example of a trading with trend. Two examples, one here, one here. In this move, market tests and you get a really nice leg. In this move, market tests, okay? Market tests, and look at the move. So either one of these is, what is it? Let's see, 1, 2, 3, 1, 2. This is a 5R move. This I think probably like 6, 7, 7R or almost 8. I just call it 7R. So each time you see the same thing. If you're lucky, you'll get a move like this, but the damn thing doesn't come back and test, so forget it. This went too low. It's this one. So again and again, it's the same story, the same story. Look at again. This is with trend as a signal, right? Look at the size. Look at the leg. Now, I'm not saying all the counter trend are small, but the majority of them are small, and they will mess with you in terms of psychology and also in terms of profits, all of that. Let's see over here. Anyway, uh, 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 uh. All right, let's go to the next market, gold. So here you rally up, boom, boom, boom. I think this was at the low, right? And even when it's very reversed, like 1, 2, 3. So I mean, you just have to know that the market is not is going from a downtrend to uptrend. So it's really important to understand that. Right there. I mean, it's like not 2, 3. It's again and again you see big moves again and again. It was turning. It's still under. And finally it turns here because of whatever reason. It goes beyond this higher, consistent with the higher time frame. And look at the size. You see? I think it climaxed here, but I don't want to short it. But I think it's really telling right there. Anyway, so the point here is trend and counter trend, right? So you have trend and counter trend. The trend will always have more R. The counter trend is subject to A, not working, B, it will always have small r, like a relative comparison, and the signal is the move, meaning as soon as it breaks, that itself is the move, because all it's doing is it's testing. That's the purpose of a counter trend, is to test. This is the purpose of a counter trend. It's nothing more to test. Okay, so you must know this, that this leg here is pulling back in order to test. This is extremely important. Why? Because if it goes down, folks are going to try to short against which area? Right about here. And what happens? They get blown out. Okay, so this is really important. All trades need to be taken with trend. And you shouldn't, even though 1 or 2 counter trend will work throughout the day, the rest won't. Or they will just be break evens, or they just won't work, or you'll get sprung or upthrust after distribution and shaken out of the position. Like right here, I'll give you an example. This is a good one, where you see here, this is the biggest volume in 49 waves. Fucking 49. And it breaks trend. You have down, up, down, whatever. No question about it that it breaks trend. It breaks trend right there. It breaks the external structure or whatever you want to call it. It's basically the low before the high, the rally low. It break, test, and what do you get? This is all you get. I mean, literally, this is a joke. That's the leg you get. And what happens after that? It goes higher. Why did it go higher? It made a new high and it goes higher because A, this is nothing more. When it pulls back to test or go in spring position, that buyers come in. When it pulls back, buyers come in. 2, their springs, and 3, early shorts who shorted here, they are getting covering the shorts. So this is all for the purpose of those 3 things: testing, springing, short covering to create a new high. All right. Okay, that's all for today. Thanks. Bye.